The S&P 500 traded flat most of the trading session today, consolidating right around this 50 EMA on the 15-minute chart before breaking out in the last hour towards the big 6,700 gamma exposure strike. We hit this level last week and then rejected. This is that pullback we've been talking about around the new OPEC cycle that we just started. Ultimately, it was a very shallow pullback, and we've seen basically a bounce over the last couple of trading sessions right back up to all-time highs. But just looking at the data, we are reaching our upper dealer cluster zone once again, and we really haven't seen that much of a shift in the total gamma exposure picture. The largest GEX is still at that 6,700 strike, and when we look up the options chain, we're not seeing a lot of growth above 6,700 yet. 6,750, 6,800, those are our next targets. So there's going to be some additional selling pressure if we get above 6,700 from option dealers who are all mostly long calls that are being sold at this 6,700 strike. So normally in these situations, we want to see big volume coming in above at higher strikes in the options chain, and we want to see gamma exposure growing, especially positive gamma exposure growing at these higher strikes. So we've got a little bit of gamma exposure at 6,750 and 6,800 like I mentioned, but today we didn't really see a lot of volume coming in the options market. So that's something we want to pay attention to tomorrow to see whether this volume up here picks up and whether or not that's going to translate into gamma exposure. That's going to determine the likelihood of a larger breakout and a move up to that 6,750 and 6,800 strikes. So as of now, like I mentioned, the setup looks very similar to the last time we came up to the 6,700 strike, and I'm thinking that dealer selling pressure is going to be pretty hefty up here, anywhere between 6,700 and 6,720. That's something we're going to be watching in real time during tomorrow's trading session. By the way, you can follow along as we analyze the market in real time. You can track our trades and see all the moves we're making by joining us in our community Discord, absolutely free. I'll put a link in the description below for you guys to check that out. Let's take a quick look at the VIX, the volatility index, and I want to come out here to the daily chart. This is one of the areas that we've been pointing out, this volatility compression, basically since the big April spike. Volatility has been compressing since then over the last 5 months or so. We are seeing a little bit of a divergence on the VIX. The VIX was actually up today just under 1%, with the rest of the indices also up. So that's a little bit of a divergence that we need to look out for. We're also going to be looking for potential divergences in the VVIX, as well as the VIX, as well as the rest of the indices tomorrow and Thursday to see if this pattern continues. A lot of times these divergences precede big spikes in volatility, and so that's something that we're looking for. One of the things that Sean's been pointing out, especially in our live stream over the last couple of days, is this series of higher lows that we've been seeing in the VIX basically during the month of September. So even though prices have really continued upwards, we're also actually seeing volatility making a series of higher lows and higher highs, and that's a little bit of a red flag to look out for as the market moves and makes new all-time highs, that a potential volatility spike could be coming around the corner. We're not expecting anything like we saw back in April, but certainly a spike into the 20 to 30 range is not out of the realm of probabilities, and that's something we want to look out for heading into October. Next, let's take a look at gold. We'll look at GLD, the gold ETF, up another 0.85% today. Almost every single day it seems like gold is moving higher, closing today at 355.47. The gamma exposure picture continues to point to higher prices in GLD. As you know, we've been trading our weekly income strategy on GLD going back for the last 5 months or so, and this breakout over the course of the last month has really been breathtaking, all the way up to this 350 strike. The largest GEX level is at 355, which is currently where we're trading, and we're seeing gamma exposure growing all the way up to the 380 strike. We are also reaching our upper dealer cluster zone. We're not seeing gamma exposure growing larger at 360 or 370 yet, so this could be an area of a potential pullback or consolidation consolidation. It wouldn't be surprising, especially after the big move up that we've seen, just over the last 3 to 4 weeks. As I mentioned, we are continuing to trade our GLD weekly income strategy. This is a sub strategy that we're trading in our portfolio, and it's actually a sub thread in our community Discord, which you can track all of the trades we've been making in GLD going back for the last 5 months. We're averaging over $1,000 a week over the course of the last 5 months. The strategy continues to work well. Just yesterday, we locked in $2,000 on our short October 3rd GLD 345 puts on the big move up yesterday, and we rolled out to the October 3rd 350 puts. So these are the short puts, and we actually hedged those short puts by going long the October 31st 350 put. So the 350 to 355 zone is kind of our target area for this week, and that's really one of the beautiful things about this strategy. You're basically just collecting premium within these wider zones, and so overall the trend in general looks to be heading into these higher strikes. The gamma exposure is continuing to grow at these higher strikes. We just think there's going to be a little bit of a pullback somewhere between 350, maybe even down to the 345. But in general, we think the overall trend remains intact, and we're going to continue selling premium, collecting that each and every week that we can. And as I mentioned earlier, you can track our GLD weekly income strategy in real time as we're managing our portfolio by becoming a member at geeksoffinance.com. Link in the description below. Along with GLD, let's take a look at SLV. The silver ETF was actually down today 0.31%, closing at 42.37. SLV also had a recent big breakout at the beginning of September and has moved up sharply from the 36 level all the way up to around 43 before having this little pullback that we saw today. The largest gamma exposure remains at the 40 strike, and so a pullback back down into 40 over the next few days does seem like a higher probability move, in my opinion. We do see gamma exposure is growing at higher strikes, so potentially the 45 level could get hit, but usually you see some sort of pullback or consolidation before some of those higher strikes get hit. This is that classic stair-step pattern that we look for in the gamma exposure data, and that's when we see trending patterns that head towards those larger gamma exposure levels over time. And so we want to stay in with the trend, and as price moves, we can collect premium. We can put on a number of different strategies to take advantage of that trend into those higher gamma exposure strikes. I will note today we actually did see more volume in the options market at lower strikes, and so that is also somewhat of a red flag for a potential pullback. We saw over 100,000 contracts traded out of the money at the 30 strike as well as at the 40 and the 39 strikes. Again, I don't think we're going to pull back all the way into the 30 strike, but a pullback, somewhere around the 40 level does make sense before we see the next leg higher. Next, let's take a look at Tesla. Tesla is up 0.34%, closing at 444.72. The largest gamma exposure concentrations have been at the 450 strike and the 500 strike now for basically the past month. We've been looking at these levels on Tesla. It finally broke out above the 350 level. This was a pretty lengthy consolidation pattern where we saw a series of higher lows leading up to the ultimate breakout just a couple of weeks ago. But all along the way, gamma exposure has been leading at 450 and at 500. So we're kind of consolidating just slightly higher, grinding higher towards that 450 strike. But every single day we look at this, big volume is coming in at that 500 strike. So it's pretty significant volume for being so far out of the money. A lot of call buyers coming in, speculating for a move higher into that 500 strike. From our point of view, however, we're betting that there's going to be some consolidation for at least the next week or so around this 450 level. This is a little bit more speculative because we have so much volume and gamma exposure at 500. So a larger breakout and a larger move could happen at any time. But we are targeting the 450 strike for the next couple of weeks, and we're using a premium collection strategy to potentially collect some profits there if price hovers around that 450 level. So far, so good with price trading just below 450. We've got some wiggle room, if we do see a little spike up in Tesla. But ultimately, heading into year end, I do want to play for a move up to that 500 strike, and we're even seeing gamma exposure growing a little bit at 550 and 600. 500. So this is one of those that could see a larger breakout into year end, even beyond 500. So that's something we want to watch for. Maybe even throw a few speculative out of the money call debit spreads, targeting some of these larger strikes for a big year-end move. So this is something we're going to stay on top of over the next couple of weeks to see if the probabilities are increasing for a continuation move up to that 500 level as a potential first target later in October. And guys, there is still time to take advantage of our special promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. We do have a couple spots remaining, but this promotion is going to be wrapping up as September ends, so definitely take advantage of it while you can. Members get full access to our Gamma Exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. It's a great resource, so you definitely don't want to miss that. Check out the links in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.